This man built a $200 million empire selling something he found for free. And then he lost it all to the technology that he helped create. His name was Frederick Tudor, and it all starts in Boston. The year is 1805. A frozen pond and a gap that nobody else could see. 1,500 miles south in the Caribbean, there's a whole population of people that have never tasted anything cold before. That gap where ice was free in Boston, that was the opportunity that Frederick Tudor wanted to capitalize on. But there was just one problem. 3 weeks of passage in the hot Caribbean sun. How do you make ice last that long? That's a gamble investors were not willing to take. In February 1806, Tudor sold everything he had, mortgaged his house, and bought a ship, filled it with 130 tons of ice, and set sail for Martinique. In the meantime, his cousin was supposed to reach Martinique ahead of him and build a shed to insulate the ice. The only problem was, he didn't get there. Tudor arrived with a hold full of ice and nowhere to put it. He tried to sell it under the hot Caribbean sun and watched the whole shipment of ice disappear before his eyes because people didn't know what they were looking at. Tudor lost around $4,500, the equivalent of $128,000 today. That was his first real taste of what business could cost him. But he didn't just pack up and go home. He went and packed another ship full of ice. Every bar on this chart is a voyage, and almost every voyage ended in a loss. That's 4 years of straight losses until he made a very small profit in 1810 of $1,000. 3 times they threw him in debtor's prison. 3 times they let him out. And every single time he walked straight to the docks, loaded the next ship, and was ready for another voyage. This wasn't because he had a plan. This was because he could not stop. This was obsession. And there's a difference between a plan and an obsession, which we will get to. The breakthrough, when it finally came from somewhere unexpected. At this point in the story, we're 9 years in, and Tudor was finally starting to understand the real problem. It wasn't the shipping, it wasn't the melting, it was that people didn't really know that they wanted ice. And so, Tudor did something no investor at the time would have suggested. He started giving bartenders free ice. He taught them how to use them in cocktails, and he told them to put it in everything. They started doing A/B tests, started giving people a warm drink and one with ice, and as you can imagine, people never went back. Once you taste that cold drink in that super hot 30-degree Caribbean summer, you're never going back. So, you don't sell the product, you sell the feeling that it creates. And Tudor cracked this way before any of this modern marketing had evolved. So now, all he had to figure out was the cost side. He realized that packing ice in sawdust insulates it far better than hay or any other insulation used at the time. Tudor started getting free sawdust from sawmills in Boston because they had literally no use for it. Then, around 1825, his partner Wyatt invented a plow that was pulled by horses. This was able to cut 3 times as much ice in the same amount of time. That was a breakthrough in operations and unit economics. So by the mid-1820s, 4 cities were finally profitable. It worked. All those years of struggle finally worked, and he was finally making money. But look how long it took. Most people would have stopped. And honestly, probably most people should. Knowing when to stop is a real skill in itself. But Tudor didn't, and that bet paid off. What was on the other side ended up being real. Tudor might not have been the smartest investor, but he was the most stubborn one, and that paid off. The most successful people aren't always the ones with the best idea. Usually they're just the ones that are still standing when everyone else has given up, packed up, and gone home. Tudor was that person. Obsession is not just a personality trait. It can be a real competitive advantage, but only if what's on the other side is real. And for Tudor, it was. Later in this video, we'll see what happens when it wasn't. Tudor was finally making real money, which is when he decided to take the biggest risk of his life. It's May 1833. The brig Tuscany leaves the Boston harbor carrying 180 tons of ice. The destination? Calcutta. That is 16,000 miles, 2 equator crossing and 4 months at sea. And in the end, over 100 tons survived. That's over 50% of what he had loaded in Boston. Indians stood on the docks. They flocked to it to watch these ice blocks the size of suitcases being unloaded from a ship. Many had never seen ice in their lives. Calcutta alone, one city over 20 years, made Tudor over $220,000 at the time. That is worth over $8 million today. Therefore, Tudor believed that he was untouchable. But the story turns here. So now it's 1834. Tudor is finally making money and he's genuinely wealthy. But he starts noticing people around him, so merchants and traders, make a lot of money on coffee futures. What took him decades to build, people were doing in months. So he starts getting a little restless and starts thinking the way any obsessive, stubborn person would. He thinks, I could do this too. And so he bets his entire ice empire on coffee. A futures contract is a bet on where the price of coffee will be months from now. If you bet right, you make a lot of money. If you bet wrong, you lose everything. And Tudor bet wrong. $210,000 in debt. That's the equivalent of $8 million today. Just gone in a single trade. Tudor invested in a market he didn't understand with the money that he had made in the ice trade that he built over 30 years. And so, Tudor spent the next 15 years paying back that debt. You would think the Ice King could get out of debt faster than that. Every cent of profit from Calcutta and the Caribbean goes towards paying off that debt. That's 15 years. At this point, Tudor is 65 years old. But the coffee crash wasn't a one-time mistake. It was a symptom. It points towards flaws that Tudor had underneath all of that obsession and grit all those years. In 1851, a doctor in Florida named John Gorey invented something dangerous. Not dangerous to people, but dangerous to Tudor's business. He invented a machine that compresses air and while decompressing it, created ice out of thin air. Tudor had the money to buy the patent, he had the connections to build this into a real business, and he had the operational knowledge from 30 years of running an ice trading business to really make it successful. But he reached for the only weapon he had at the time. He allegedly funded a smear campaign. He paid newspapers to call Gorey a crank. There was literally a news article in Florida that read, "There's a crank down in Florida that thinks he can make ice as good as God Almighty." Gorey's investor pulled out, and he died penniless in 1855. And Tudor went back to his frozen ponds and his same old ice business. But you cannot kill an idea by killing the man who had it. When rivals entered the ice trade, Tudor's response was surgical. He undercut them on price for long enough for them to lose money, and he had a lot more runway than they did. And after they shut shop and went home, he raised prices back up again. It worked every time. But this strategy left him with no allies, only enemies, and a reputation for being someone who crushed instead of competed. In the good years, that doesn't matter, but in the hard years, no one comes to help you. Coffee, cotton, spices. Every time, Tudor used his ice business as a collateral to make bets that he didn't understand. But here's what's strange. Tudor understood why this was wrong. He lived the value of deep understanding for 30 years. So the pattern isn't really ignorance. It's ego, the belief that being right once means that you'd be right every time. So here's the second lesson. How you build wealth determines how long you keep it. Reputation, relationships, smart diversification, these aren't just soft skills. They're the foundation of your financial infrastructure. In 1855, John Gorey died, but an Australian scientist called Harrison picked up the project where he left off and built a much better machine. This machine could produce 3,000 kilograms of ice in a single day. Then came more machines. Then came factories with more machines. Then those factories moved to every single city that Tudor spent years trying to conquer. At this point, you didn't need a pond, you didn't need a ship, and you did not need Tudor. A new way of doing the same thing, cheaper, faster, better, anywhere in the world, that made the whole game that he had mastered completely irrelevant. This was called artificial ice, AI, and this isn't the first time AI has disrupted a whole economy. Let's look at this chart. Blue is Tudor's fortune climbing to 1864. $200 million in today's money. That is 60 years of obsession made visible in a single line going up. Then there's the gray. 36 years for an entire industry to vanish. This was not a crash. This was the whole world not needing frozen ponds anymore. But here's the thing that should unsettle you. Tudor saw this coming. He knew the patent existed. He knew the inventor's name. But instead of going for an acquisition, he chose a smear campaign. And that brings us to the last lesson. Every moat has an expiry date. Tudor's was a frozen pond. Yours might be your skill, your salary, or your industry. The thing that feels permanent right now because it has always worked. Therefore, the question isn't whether your moat will expire. It's whether you'll be honest with yourself to see it coming and move before it does. Tudor had discipline. What he never built was structure around his wealth. He had one big moat, 3 major flaws, and no one to tell him when he was going wrong. So tell us, what are you so convinced is working right now that you've stopped questioning whether it still is? Most people are in a version of that right now. They have a stable salary, maybe a few mutual funds, and a feeling that everything will probably work out. But industries disappear, salaries change, and markets can collapse. Do you have a structure to protect yourself from that? Fabits helps you build the financial structure that can survive all of it. There's more information in the description below. I'm Adeep from Fabits, and I hope you subscribe because the next story is just as good as this one.